Welcome back to episode 53 of the Viris and Numerous podcast. I'm with a special guest today, Joshua Shigala of the Standard.io. And he's also a Vitoro, so I want to hear a little bit about that as well. He's got a couple companies at least that I know about. So welcome to the show today, sir.
Hey, thank you very much for having me. It's a pleasure to be here.
Absolutely. We talked a little bit through DMs and stuff, and came to an agreement about talking today. And I really appreciate you coming on here. I know you're a longtime Bitcoiner as well, and I also found out that you're also an anarcho-capitalist. So you and I have a lot in common.
Yeah, man. Hey, how can you not be? Why would you want involuntary interactions in life? Why would you want to use force? Why would you want the initiation of the use of force to be monopolized or to be justified?
Absolutely. So I'm curious, but I kind of like to get a little bit of background. I got a little bit before we got on here, but
Yeah.
do you mind talking about like where you grew up or anything like that, just to give a little bit of backstory on your life?
Yeah, sure. I was born in Germany. I was born stateless, so I guess that's where the anarchist comes from. And then my mother managed to get me a British passport, and uh, and then we migrated to Australia, and I grew up in Australia, and then 30 years later, I came back to Berlin. But during my time in Australia, I moved up to Sydney and started working in film and television, and I even did a shot in the original Matrix, and worked in television, doing special effects, leading large special effects teams, and I also already always had startups going in the background. And one of the big startups that I had was a swap site where women could swap clothes instead of buying and selling. And that's really when I started to look into digital currencies, because swapping was just a crappy way of doing anything. Um, it's just not very efficient. And by having some sort of token in this website that people could have, would really have made the experience a lot better. And I mean, back then I was calling them credits. This was around about 2005, and six, seven, somewhere around there. And I started looking around for a solution, because I didn't want to create a token that was that would make me a central banker again, right? I'd be like, how many tokens do I issue? Yeah, just like what? So then I looked around. I found what the cypherpunks were trying to do. It seemed like an unsolvable problem, and then I just went on and sort of forgot about it. I tried to build something myself, but it didn't work, so I just left it and let people swap. And then in 2010, the social white paper came across my table, and I fell off my chair and thought, yeah, this is it. This is it. This is the double spend problem solved. And yeah, been playing that rabbit hole ever since. And then in 2012, I moved over to Berlin for a while, and then in 2013, Mt. Gox collapsed, and I lost a lot of money in that. And I started to actually think about how to build a decentralized exchange from that, because Mt. Gox collapsing was the first of really major. Like, if you think of FTX right now, the community was a lot smaller, right? So pretty much everyone that was in the community back then had money on Mt. Gox, because it was the only exchange to really. There was BTCE, there was a couple of other ones, but it was a major player, and so that was a big upset. And I just thought, man, it sucks that people are raining on a parade so grand and so wonderful by just being idiots. And I thought the way to solve this is to have a decentralized exchange, that so we wouldn't have to trust, send. But Ethereum didn't exist then, and the op return codes weren't, which is the programming language behind Bitcoin, just wasn't really available. enough. It wasn't complex enough to build that. So we focused on transparency instead and built the first ultimately transparent exchange, which was called Vaultoro. And it was also the very first exchange to deal with without fiat at all. It was just Bitcoin and trading with physical gold. And that was the idea behind that was, with when Mt. Gox collapsed, all these people that were holding fiat on Mt. Gox also lost their money.
Mm-hmm.
And so it was like, why are we trading in fiat anyway? We're Bitcoiners. Why are we going back to fiat? So let's trade it in gold. Let's try to find a price in gold instead. And that was the thinking behind it. But Vaultoro effectively has never been like a massive, big over success. It's great. It's still going. It's never been hacked. It's doing its thing. But it's not, it's been a bit of a testing ground as well. Like it was the very first exchange to launch the Lightning Network. We currently don't have it in there at the moment, but we were the first exchange in the world to implement that. We're the first exchange to be radically transparent and all this other stuff. So, it's been a real journey, but what we found is that in around 2020, we really noticed that a lot of people were using stable coins. And then I was thinking, this is getting scary. One of these stable coins is going to collapse. It's going to take the whole industry down because it's centralized and maybe they're rehypothecating in the background and they're just mucking around with these our industry, and we could have another Mt. Gox sort of scenario happen. And actually in 2019, I went to La BitConf, which is really one of the best conferences, and gave a talk there about the collapse.
The biggest one in South America, right? Isn't that right?
Yeah. It's really cool. If you get out that way, folks, it's definitely well worth. I think it's just recently been again.
Okay.
But Rodolfo there, he runs that, and it's just sensational.
But
Yeah.
I wanted to back up a little bit. It's good to hear more about your story and stuff. I'm curious how you found anarcho-capitalism before we get really into like the standard and everything else.
Yeah.
What brought you to anarcho-cap? I mean, you already mentioned you were born stateless, but obviously we are like less than us anarcho-capitalists, we probably make up less than 1%. I know we do. We make up less probably than 1% of the population. Was it one book or was it somebody, a professor, a teacher or something that put it in put it in front of you?
Yeah, I mean, it was really deep diving. Like after September 11th happened, I really wanted to follow the money. I wanted to understand why that happened. I didn't buy the whole religious nut in a cave thing. And so the fact that Building 7 dropped was for me really weird. And then I started seeing that they had all this gold that was shipped out from the sellers like 2 weeks before all that happened. And I was like, gold, huh? And then I followed that and I started wondering about money and following the money and who makes the money. And this was around 2000 and, obviously just past 2001 after September 11th happened. And it fell down that deep rabbit hole of like, who creates the money? And then obviously reading the Austrian economists and sort of going down that rabbit hole, but then discovering, Stefan Molyneux and some of his earlier works with some of his early videos were really, really interesting. And then reading, Murray Rothbard, but also, Friedman, David D. Friedman's book was really life-changing as well. And it's interesting because Milton Friedman, his grandson, Patrick Friedman, just joined the Standard as an advisor as well. So I'm really honored to have him join us on the mission to create a stateless money. And yeah, so it's really exciting to sort of look through the history of what's happened and sort of take everything from first principles. Don't steal, and don't hit. Don't hit and don't steal. You know, really basic rule set, kindergarten stuff.
Right.
And see how we can move from first principles to and bring that throughout the whole of society. And really, if you follow that, you just can't have a state. You can't have a government. It's not. So what do you have? Because obviously you want rules. You don't want people just breaking into houses and just running amok. And you don't want people like Sam Bankman-Fried just destroying billions of dollars and scamming everyone. You don't obviously you want rules, but maybe not rulers. And so I had a really great interview just recently with Nicholas Unsinger. He's launching a place called Prospera, along with Patri Friedman, is also invested in that project. And it's near Honduras, and it's a startup city where you can actually decide which regulations you want to follow. So you just need to decide which ones. They don't put a regulation on. So this is really exciting, because what it means is you start to see competing regulations happening and such. So that's really exciting. And I think that's where it's at, having these startup cities, having competing currencies is part of that, but having competing countries with new governance structures is also one of these.
David D. Friedman's actually been on this podcast too. I'm a fan of his as well. I'm gonna try to have him on here probably at the beginning of next year again. I think are you referencing the Machinery of Freedom? Was that the book?
Yes.
Yeah, it's a good book. I actually just read it again because I wanted to talk, or for the first time, I wanted to talk to him about specific parts of that book. I'm more of a Rothbardian, but I'm not a huge Milton Friedman fan. I talked to him. I don't think he's wrong in a lot of things, but I think Rothbard, the way just a little bit more my style with the anarcho-capitalism and stuff. But Friedman obviously was really good too. And David D. Friedman, I asked him how he became an anarcho-capitalist on this show too. He's a really interesting guy. I haven't looked into Patrick's work or anything yet, so I'll have to check him out.
Yeah, Patri, it's Patri.
Oh, okay.
It's really fascinating, because when you first fall down the rabbit hole, you think, you hear this thing of like, you can't have private prisons, you can't have private police, you can't have, and because it's got such a bad taste to it. Just even when I think about that, I just think, oh, a little bit. Even now, I think, oh, but really, what does the word private mean? All it means is that it's running in competition with others,
right?
And there's a whole branding thing, there's a branding problem around anarcho-capitalism. Even Prospera is dealing with issues because people hear like, for-profit governance, that sounds really bad. Why would you want a government that's for profit? And so it's about taking like anarcho, like, so anarchy, everyone just can't stand that word because it's so loaded, and then capitalist, which is totally loaded, especially with youth. And mixing those two words together is just like, you can't win. So I do like the term voluntarist in a way, because it sort of removes some of that preloaded preconceptions that people have. But yeah, I do feel that one of the things that the whole Trumpian and the whole Biden situation, and I think, yeah, people tend to go always sort of default back to politics. But at the same time, if people lose trust in the way things are being voted on, I think eventually we need to start looking, and maybe they'll start looking at other solutions. But fundamentally, I think Stefan Molyneux's correct in that it's a societal change. It's a multi-generational change. We can't expect an post-enlightened anarchic society to arrive if we don't treat our children properly, if we don't have them growing up using peaceful parenting mechanisms so that they don't just, worship authority, rather they question and stuff like that. So yeah, anarcho-capitalism, I think, is the ultimate goal, but it's going to take generations to get there.
Yeah, it's funny. I agree with you. If you say you're an anarcho-capitalist, there's automatically you're kind of, even though you're not meaning to, you're kind of putting up a wall to like the average normie or whatever you want to call them, the average person, that hasn't done the work. I mean, anarcho, like you said, it's like a loaded term. I mean, what does it mean? I think it's from the Greek. It means without rulers. That's all it means. And then who wants to really be ruled? And then what? Capitalism is voluntary exchange. But if you look at like the way that it's been the evil capitalists now, like the media and stuff, it's just there's so much propaganda today. But I do feel like we are like I feel like there is a lot more. I think crypto and Bitcoin in particular have had a lot to do with the people seem to be more open to it than ever, but there does seem to be like there obviously there's these two sides, and it's become very polarized more than ever, and I think there are more people coming to our side, but the other side is just like, I don't know. There's some that are very you can bring the people in the middle over, but there's some that are like way, the mainstream media people are just kind of way gone, in my opinion. I don't know.
Yeah. I mean, one thing that I really liked about sort of anarcho-capitalist philosophy was that it gave answers to things through questions.
Mm-hmm.
But if you just sort of listen to, I was at the time back after 9/11 stuff, listening to a lot of Loose Change and Alex Jones, and think of them what you may. It doesn't, these sorts of people are really important in society because they point out stuff that people don't want to talk about. And yeah, some of it's wrong, but some of it's right. And like he was pointing out, Alex Jones was pointing out stuff that Edward Snowden revealed years before, like down to the fine details of where the buildings were, that they were being funneled. All this data was being funneled from AT&T in. All of this stuff was being told by Alex, but everyone just wrote him off. It needed this insider to come out and blow the whistle for everyone to go, wow.
The puts on the airlines that day and everything, things, there's just so much stuff that people don't even realize that,
Right.
There were obviously people that weren't hiding out in caves that had advanced knowledge of it. I have to agree there.
Yeah, right.
I read the commission report too, and it kind of led me down. Honestly, I started like, we have very similar path, and it seems like I was a few years behind. I think I was like maybe 2006 or 7 is when I started like researching that specifically, and that and then I found Bitcoin in like late 2009. I think it was randomly just on Twitter, but it's just interesting how these events can like send you down a rabbit hole. Somebody who's sort of an autodidact or whatever might be more inclined to like come up with these answers early. That's what I wanted to ask you next is like, do you think that being an anarcho-capitalist allowed you to see the value in Bitcoin from the onset? Like it seemed like you kind of had the similar experience to me when the white paper came across. You came across the white paper. Was it a pretty quick light bulb moment for you, or?
Yeah, it was pretty quick. Purely because of that sort of ANCAP thinking, and that also because of my me trying to find that solution within SwapStyle years earlier and it not existing. I was like, I kind of knew that the problem that was needed to be solved, and that was that double spend problem. And so when it did hit, I got it pretty quickly. What I didn't appreciate was how much I should have bought back then. I was like telling everyone, there's videos of me in 2011 just saying, telling people Bitcoin's not a scam, it's not a tulip bubble, you're wrong, and telling people, but it was almost impossible to buy. You had to like send stuff through some Dwolla service over to or go through like Second Life to try and like then get the credits over to Mount Gox. It was just, it was really, really difficult. Also, you could mine it, but even, funnily enough, even back then, if you had a miner, it would take a while, and you couldn't hold it. Like the electricity cost more than the Bitcoin you were getting because the Bitcoin was cheap. It really wasn't worth much, and so you'd have to hold it for 6 months or something for it to be worth something. So it was like draining a lot of electricity, and yeah.
That's actually how I managed to crash my first and lose all of my original cryptos. I was running full node on my Mac Mini because
Oh,
back then the chain wasn't that. I don't remember how many gigabytes it was. I don't remember, but it wasn't very many. And
yeah,
I downloaded the client, had no idea what I was doing. I just read the white paper and I was like, this is so interesting. And yeah, but I remember you could actually buy crypto on eBay and stuff back then, and
yeah,
people were making paper wallets for other people, and then they would pay you, and then you would just send them the paper wallet. It's like so much stuff that people like don't even know about. Like that old history is pretty
yeah,
cool to get into, but yeah,
yeah, yeah.
there was a lot of cool stuff back then that people didn't even realize that, some guy's making this paper wallet, he could just rip you off if he was untrustworthy. But yeah,
Yeah,
crazy.
yeah. There was a service called InstaWallet back in the day. Do you remember that? And you just basically went to this website and it would automatically generate a wallet that would be in the URL. So all you had to do was bookmark the URL.
I don't remember that
And
one.
yeah, and a lot of a lot of people started using it, and then of course the service just went offline one day and stole everybody's Bitcoin. And that was just like, that was before the Mount Gox collapse, but it was just one of those next sort of annoyances that I was like, man, we have got a chance right now. This is the biggest step forward in human freedom that
Right.
we have. And you guys are messing around stealing people's bread money, because it was back then, not, it wasn't worth much, but now, man, it's worth billions. What?
Yeah, I
So,
fumbled the bag on that too. I was very I was too much into prophesizing or trying to help other people out. Like, listen, this is going to be a big deal. Like, just check it out.
yeah,
At least I was on Facebook like every day back then, telling people to like just Google
yeah.
Bitcoin and start reading about it. But yeah, instead of like what is that about being a philosopher king? And first you need to be, I forget how the quote goes, but you need to be a king before you become a philosopher. I can't remember the exact.
Right.
You have more success. But let's
Yeah.
talk more about the standard. When do you guys actually formally launch?
We're launching formally on the 28th of so in like 10 days,
Nice.
which is really really exciting. We've basically, it's a, yeah, I mean, let's step back a bit. In Like I said, in 2019, I gave that talk, LeBitConf, about how one of these algorithmic stablecoins is going to get really big and then die, and it's going to pull the whole industry down with it. Of course, we'll survive, and but trust will be broken, and it's exactly what happened with Terra Luna. But before that, between me giving that talk and Terra Luna dying, I started writing my ideas down about the ultimate over collateralized stablecoin protocol, um, because I really love the idea of a gold standard as well. Like, I love the idea of locking up, um, rare assets and allowing others to borrow from that. Um, so so then I was looking at what Maker was doing. I researched a whole bunch of different protocols and what they were doing, and sort of took the best of those, but then also added some other things in there to really make it next gen. And so, yeah, so we're launching on the 28th, the first stablecoin. So the standard is a suite of the goal is to have a mirror for every major fiat on earth, so that we can have almost an effects market in the blockchain space. But how we're rolling them out is using what's called an IBCO, which is an initial bonding curve offering. And what this basically is we're building a pool where people put Ethereum in or wrapped Bitcoin, and then the first people that do that buy the first S euro at 80 cents. And as more and more liquidity fills up this pool, that discount gets less and less, and the pool fills up and less until it reaches a 1-to-1 peg. And then there's a bunch of value in there, so people can always send the S euro back in there and get Ethereum back out or whatever. But as you might realize, if you do a little bit of basic math, is it's under collateralized at that moment because we've sold the first S euros at a discount. So there's like a nice yield farming sort of event.
Mm-hmm.
But so while we're waiting for that 1-to-1 peg, because that could take a couple of months or whatever to fill up that pool, the next step is that you can take that. There's no one's going to offer you €1 for your S euro yet until that reaches 1-to-1, because why would someone buy it off you for €1 if they can just come and join the IBCO and get €1, get it for cheaper, right? So what you can do while you're waiting is you can actually put it into the liquidity pool. You can sell it to us for €1 worth of value. Like we'll buy it off of you using a bond mechanism. So we'll sell you a bond if you put that S euro with USDT into Uniswap pool, and that actually over collateralizes the whole system, because we use all the stuff that's in the first when people bought the S euro, then they put the S euro into the liquidity pool, and that's sort of over collateralized. So it's a really nice way of earning a good quick yield for people participating in the mechanism. But this is where that's just the launch, and this is really what it's not that exciting for me. It'll make a lot of people some good money, and it'll help fill the stability pool.
Mm-hmm.
But what's really cool about it is that once that's done, we release the smart vaults, and the smart vaults allow people to, now that we've got this stability pool, to lock up funds like Ethereum or Bitcoin or even tokenized gold, and borrow against that. So you can send money into a vault, let's say $1,000, and then you generate 500. Let's say you can go up to 85%, but let's say 500 S euro, and or half that value, and borrow from yourself. And I just love that idea, because now you don't need to go beg a bank for a loan. You can just issue yourself debt. And the great thing about that is, the reason why you'd want to do that, let's say you've got a whole bunch of Bitcoin, and you probably went through this yourself. Back in the day, I was always selling Bitcoin for, crappy stuff like, I needed to move house, so I needed to put a deposit on a rental apartment, sell like 30 Bitcoin or whatever it was back then. And you're like, and now I could buy an apartment for that, So imagine if I could take that and actually just lock it up and borrow it. And then I don't get hit with capital gains tax because I haven't sold anything. I've just borrowed some money from myself. And because we've got this liquidity pool, because we've launched it with that mechanism, it means we don't need to charge an interest rate like Maker does to peg it. We have zero interest on that loan, and there's no time limit to pay it off. So the cool thing here is you can issue yourself debt and have inflation effectively paying off your loan over time. And so it's a really nice little mechanism to have a decentralized system where there's more value locked up in the system than there is stablecoins floating around. So hence the gold standard, or the standard.io, the ability to have more value locked up in the system than there is stablecoins floating around. And that's why you would just never get an issue like Terra Luna, where it was just backed by fluff. And we can go into why they collapsed a little bit if people don't know. But
if you're one of these early people to get in, like say you wanted to get in on the 28th, you said the 28th, right? When the launch
Yeah.
happens. What is incentivizing people or disincentivizing people to not is there a certain amount of time you have to keep your money in there to get that yield, which would be that like 20% premium or whatever you want to call it?
Right. So so it's broken up into three stages. Stage one, but they all happen at the same time. So stage one is you get the first people that come in, they get it for 80 cents, that S euro. That's instant. You'll see that in your MetaMask. You'll see the S euro straight away there. So you've put, let's say 80 euros in worth of ETH, you'll get 100 euros, 100 S euro. But you can then, while you're waiting for that S euro to be worth actually €1, you go to stage two, which is a bonding curve. So that's where the time comes in.
Okay.
So these bonds are at different maturity dates, and the longer you wait, the higher the yield is. And that's for two reasons. One is that we wanted to stagger out when people get paid out, because they basically get paid whatever they put in plus the percentage in the membership token, in the governance token. And this governance token has some really great features, but the main thing is that we wanted that to be staggered so that people don't just get paid in this and then they just dump on the market. And the reason why we went with a bond is originally these projects, what they did is there's been some really good projects that have like issued their own membership tokens or governance tokens, and what they do is they offer a nice yield and then yield farmers come in, they offer their liquidity in these liquidity pools, and these companies are like, or these projects are like, oh yeah, here's a great yield, so come and stake in the liquidity pool, and they're like giving these their governance tokens out. Eventually they run out, right? Because you've only got so many of them, and then the yield farmers are like, first of all, the project's like, okay, we're going to dial down the yield because otherwise we're going to run out. And then the yield farmers go like, they were paying us 20%. Now they're paying us 10. The new project over there is paying 20. I might just dump everything I've been paid, so that crushes the price, pull my liquidity out and jump over to the next best thing. And so that's what we wanted to stop. And actually, what was it? Olympus DAO was the first to use this mechanism to basically buy liquidity off of the yield farmers rather than renting it from them. So that's why we will buy it with a bond, the liquidity off of them, and then we'll pay them fully in that membership token. And then you can, if you're holding a bunch of membership tokens after like 30 days, you can then stake that. You'll get them back. You can pull them out at any time, but all that liquidity that we pull in will be earning a yield by people trading these stable coins. And we're going to have almost an effects market between different stable coins and stuff. But also just the DAO will decide where to deploy that for the highest yield. And that the mechanism there is basically just to launch so we can have a protocol with 0% interest, because otherwise, and this is really what pegs it, because what pegs a stablecoin, the only thing that pegs a stablecoin truly is, can I take this and get like this SUSD, let's say, and get $1 worth of ETH or anything else? That's effectively the only thing. It sounds stupid when I say it, and obvious, but that's all that it is. So if we can build a big enough pool where that pool will always just buy back, and then to expand the ecosystem, we have the private smart vaults where people can start locking up funds and issuing more debt to themselves like that. It means we have massive amounts of volume locked up in these smart vaults and a nice little stability pool that will keep the thing tidy, because that's really what you want, is just more value locked up that people can come and just buy, just send the S euro back into the pool and get €1 worth of ETH back out.
So is this is it all on Ethereum, or will it be multi-chain eventually? How are you looking about doing that?
Yeah. So I mean, I being a old school Bitcoiner, I did want to do it on Bitcoin. I did want to find that, but effectively the DeFi space has just such a nice ecosystem on Ethereum. So we decided to do it on Ethereum. We're launching the IBCO on the 28th on Ethereum just because there's way more volume there. The FTX thing is really unfortunate because the gas prices just gone through the roof there, which sort of sucks. But the main protocol with the smart vaults, when we launch all that, we're looking between either Polygon or ZK Stark, like Starknet's thing, and so we're not we're building it compatible, EVM compatible. But one of the cool features that we're doing, and which makes it really interesting, I feel, is well, there's two things that I really like about it. One is the ability, if you've borrowed a whole bunch of money from yourself, you've locked up these assets, and you've borrowed all this money, and then you lost your job, and you need liquidity somehow, and you've got all these assets locked up in this CDP. Hey, how about you could sell that as an NFT? So, so on an open market, you could sell debt as an NFT, and someone could then buy that off of you. In an open market, people can start bidding for your debt, and imagine if, like, then these debts, these NFT debts, can even be chopped up and repackaged, and people can, like, there's so much that can happen that should have happened in the legacy system but didn't. So transparent packaging of different collateralized debt positions.
Mhm.
In 2008, we saw the collapse of all of this stuff. The excuse was given, which is probably only half the story, but let's not go into it. But the main story that was trumped around on the mainstream media was that that a whole bunch of bankers were selling subprime mortgages into these CDPs, and no one could look inside of these and see because they were all chopped up and then repackaged and then chopped up and reevaluated, A+ rated, sold to another bank who would chop it more, and no one could look inside of that apart from the guy from The Big Short who spent ages actually looking through all the paperwork. But if these were all NFTs, that not pictures of monkeys. When I talk about NFTs here, I'm just talking about the technology of a non-fungible or a colored coin. The ability to actually look inside of you could run some software and actually query what is inside of this in terms of yield-bearing instrument, and see. And I think we could have avoided a big 2008 collapse if we had this technology. But anyway, so that's one thing, is I could sell my debt as an NFT.
That's an
The other thing
interesting.
is,
Yeah, that's very interesting. Actually, I hadn't thought of that.
it's cool, right?
Yeah.
It's cool. I think there's a real strong
You
use
would
cases.
sell somebody would pick that up, and then they would pay you a percentage on that, right? Am I getting that correct? That's how that would work somehow.
Yeah, exactly. Because you got a whole bunch of collateral there. You've got a debt, so you can't get to the collateral unless you pay it off. You can't afford to pay it off right now, but you need some liquidity. Sure, you could issue yourself more liquidity, but that would get closer and closer to liquidation.
Okay.
Um, so instead, you say, or maybe the market's tanking, and you're like, well, I don't want it to get liquidated. I think I can get more juice out of this if I just sell the debt onto someone that can go and pay it off. And then someone goes, oh yeah, I'll buy that. They see that there's $10,000 worth of collateral inside, and only 6,000 has been borrowed. So I'll buy it for 1,000 off of you. So there you got now 1,000, and then I'll pay off that collateral, and I'll pay off the 6. So that now I've spent 7, but I've got 10 out. So there's all sorts of things that are kind of interesting in that. And I really like the idea of using NFTs in the DeFi space. Uniswap has done it perfectly. So Uniswap, with version 3, instead of using LP tokens, they allow you to put in liquidity and you get an NFT as a receipt. that you can then sell on OpenSea, and someone can buy the liquidity that you actually have earning you a yield.
I haven't looked into that yet. I haven't delved into that yet, to be honest with you.
Yeah, it's
Uniswap
pretty.
is so cool though. I mean, it's one of the coolest things about, it's the utility of of Uniswap is unbelievable. It like, what it sparked in this last bull market is unbelievable. All these projects like
Absolutely.
yourself, all these companies and stuff that were able to launch and have some sort of framework to get going is pretty neat.
Man, what they invented there by having an automated market maker and remove the entire order book system, which is super complex. Like we've run Voltoro, the exchange, since 2015, which is an order book exchange in the beginning.
Mhm.
Um, is really, there's a lot of computation to make sure that order matching happens, that there's no like
Price
easy ways to game the system, that the fees can get taken out properly. There's a lot of constant computing. Automated market makers, they scrap all of that because Ethereum is effectively like a Nokia 2110. It's like it's a really slow, crappy computer. So you need
Yeah.
to really minimize the amount of computational power needed to match orders, and the way that they achieve that is really a breakthrough in finance.
I think it's super cool. Definitely one of the coolest things that's been built in crypto so far. But I like the ideas. I like how you're thinking about all this stuff with like especially NFTs. I think everything will be an NFT event. Not everything, but anything of like real value that you want to like swap peer to peer could be an NFT. People don't realize that, like you said, a lot of people just equate it with monkey pictures or whatever. But
Yeah,
it can. There's the potential for NFTs is just
it's massive.
immeasurable. Yeah, it's immeasurable. It's
It,
unbelievable.
it's huge, and so yeah, so there's that. But another thing is having like a stop lot, like an auto trade within the collateral. So there's what we're looking at also is what I mentioned with Uniswap. If you have liquidity in Uniswap and it's earning you a yield, you can also use the NFT that represents that, or the LP tokens, as collateral in the smart vault. So you can have that as collateral. You can borrow against it, but it's still earning you a yield. So that's a really interesting use case as well. The other one is if you've got like a whole bunch of Bitcoin in there and Bitcoin's tanking like crazy, we're working on a way to have like a stop loss, so that it can trade over to like a tokenized gold, because uh, gold and Bitcoin, yeah, you'll see a little bit of parity in its price, but Bitcoin would do this and gold would maybe do this. So the hope is that if you've got a debt to yourself and you don't want it to get liquidated, then you could switch it over to a tokenized gold, and that's also really interesting.
Yeah, I was curious about that too. I'm glad you got into that a little bit. Yeah, I think I like gold too. I think people, there's maximalists now in crypto. It's just I can't stand the maximalism, but I think that anything, obviously gold has been around thousands of years. It's not going anywhere, and like you said, the volatility is relative to Bitcoin. Hardly even exists. What is it, $500? Gold's probably been trading in like a $500 window for like 10 years or something like that, almost something. So,
Yeah.
it's about 13, 1400 to 1900 or whatever it got to last year. I think maybe something in that vicinity.
Yeah, I mean it's not gonna drop 20% in a weekend, that's for sure.
Right. Yeah.
Um, and but the thing with gold that's really unfortunate, I think, is that gold bugs are like Bitcoin maximalists.
Right.
They miss out on opportunities that like I see this stuff as technology. I hold Bitcoin up with the highest of esteems. I praise its glory. I love it. Like it's number one for me. But I can't do some of the stuff I want to do. I can't build some of the stuff, some of the technology that I want to build on Bitcoin, because it doesn't. They didn't. open up the attack surface
Right.
that much. You know, Ethereum has a much larger attack surface, but that's also I think wonderful because we can test out new economic theory. We can try out stuff, and stuff like the standard is complex. You know, we need to build really our goal is to be the ultimate decentralized stablecoin protocol that's fully over collateralized and fully transparent. So, you still hold your keys too. That's really important. And all of this stuff we couldn't build on anything. And I don't want to go by the next fly by night thing like Solana or whatever. I want to stand with the originals. Bitcoin was the original. Yeah, absolutely. Ethereum was the original smart contract platform, and there's so many engineers working on scalability, and we can touch on scalability a bit because I think a lot of people, I hear it all the time, like, oh, but it's so expensive, and this chain is way cheaper, and I want to take a moment to sort of dispel that for your members, for your viewers. Yeah, so like I had a little bit to play with in like a little bit to do in the scaling debate on Bitcoin, and I was not super public about it, but in the background I'd be in some meetings here and there and sign documents, and I actually signed the 2x thing, to many dismay, but then I unsigned it when Bitcoin Cash forked. I pulled my anyway. Let's quickly talk about why it will be expensive to run things on whatever chain you go on, and if it's not expensive, then the pain is somewhere else. And what I mean by that, originally I was a 3D animator for many years, working in film and television, and I started off with like 486s, like really shitty computers, and then I went onto like big supercomputers, or silicon graphics machines, but even they were totally archaic to what was to come in the next few years. And when I'd set off a render, it would take about, like, I don't know, 5 to 10 minutes of frame to render. It was a really bad, dodgy polygon, like slow polygon count, would still take 10 minutes. And then, you get the next computer, and the next computer would have, now we've got a gig of RAM, and we've got double as fast GPUs and CPUs, and wow. So you think, wow, I could do so much more. And then the clients just ask for a little bit more. Now we want like a bit more deformation here. We want more polygons. And as computing got bigger and bigger, the clients wanted like oceans and particle effects and hair. And so the render time stayed about the same, even though computing power was vastly more powerful. So what would happen in the blockchain space is that if there's a vast, massive block, if we start opening up the block space, all that would happen is like that people would just throw more and more stuff into the blockchain. Like they would just do whatever they want. Plus, right now, when you write smart contracts, you have to look at every single line of code and optimize the heck out of it. And if you don't need that, if you don't have that price feedback, then you just write shitty code, like blah, just some big crappy long thing. I don't care. It's like 0.0001 of a cent. Doesn't matter. Throw it in there. Now, when you do that, you open yourself up way more to bugs in the system. And with bugs with smart contracts, we've seen the hacks. We've seen them happen. They will happen more and more. The good thing about Ethereum is because they have to optimize and optimize and optimize and optimize, you can find the bugs a lot easier because you're looking at 5 lines of code rather than 300 because you don't care. And so if you have just a cheap blockchain that is just massive blocks and it's cheap, or they've used some other technology, all that will happen is people go, wow, now I want to put every single weather data into the blockchain, throw it in there. It doesn't matter. It's like pennies per million bits of data points. and so A, you get that. B, you get really bad code and bugs in the system. So you always need some sort of feedback to sort of halt that, to price stop that. And so I think that's why that's why I'm still bullish on Ethereum, because it has that as a base layer, and then is going for that sharding option, having the ability to have side chains like Polygon to basically take the load off of the main chain, but still have that as a security layer. And I think it's really brilliant. And people just don't understand that. Oh, it's so expensive. Yeah, it's expensive to live in London, not because it's a shit city. It's a good city. It's a fun. It's got club and pubs and culture. Like, you want a cheap city, go live in somewhere where no one wants to live.
Right. Right. Yeah. That, I mean, I think that there were gonna. I think. Well, this is we could have a debate about this all day. I agree with you in a lot of about what you just said. I do think that there are going to be some competing chains that take some of Ethereum's market share, but that'll be interesting to see how it plays out. But I do agree. I think what you're saying is fundamentally true about competing for block size and stuff, and the price of. I mean, it's essentially it's just another form. It's just capitalism again. Like, you're paying for the ability to play on this network, and you're paying for the ability to play on a more secure network, a proven network, instead of a network that has been around for 6 months. You know what I mean? Yeah. So it's so interesting to think about. I hope that there are one or two other ones that come to the compete with Ethereum, just because obviously as capitalists that we will all benefit from that. I think there's some interesting ones. We were gonna circle back to UST and stuff if you want, but I do think what they build atop of, I think Cosmos is a pretty cool ecosystem that has a lot of potential. I'm gonna have somebody on here soon to talk about Cosmos a little bit, because I just started getting into it recently, but I think that they have potential. Avalanche is interesting. There's a few that are, and I'm also interested in Near. I don't know how much you've looked at Near. They've gotten caught up in the contagion a little bit of the I think Alameda had maybe 150 million. I don't want to say the exact number. I think they had like 150 million tokens somehow, or they alone. Can't remember exactly how it worked, but so that price has gone down a little bit. But I'm investing in Near and Cosmos, and I'm gonna probably pack an Avalanche bag for the next bull market. But it's interesting. But you said you are working on making an EVM the standard EVM compatible, right?
Yeah. So one of the bits of R&D that we're doing, putting a lot of work into right now, is cross-chain minting, and we'll be the first protocol we can pull this off to do this, so that we don't, if you're on Polygon and you lock up a whole bunch of assets and you mint yourself, I don't know, S Indian rupee or something, or S British pound. Let's say you don't really use Polygon much, but that's where our main locking functions are. So what can you do if you're an Avalanche user? Well, then you need to take that and go to a bridge. You need to send it to the bridge. Then you need to send it into the bridge. You pay fees all the way, and you got to wait 4 hours. And you probably need to bridge first to Ethereum and maybe then to Avalanche. Who knows? But also got to trust that bridge. There's just a bunch of stuff. So what we're working on is the ability to actually lock up in Polygon and then mint on Avalanche,
like a 1-to-1.
So, yeah. So you don't need to then you don't mint it here on Polygon and then move it across. You actually lock the funds up and say, I want to mint it at this Avalanche address, and then it gets generated over there. These are very complex things, because there's race conditions and there's all sorts of stuff that can happen. So I can't promise that we can do it, but we're definitely putting a lot of resources into that. And
that's a super cool idea.
Yeah, thank you. We're calling it like what was it?
I
It's
haven't
really
seen
cool.
anybody else that has done that. I mean, it could exist, but I haven't personally seen anything like that. So that's cool. Yeah.
Yeah, yeah. I think it's really important because it's mainly UX and UI issues that are plaguing still mass adoption. And not only that, like if you don't know exactly what you're doing, you can really screw things up by sending things to the wrong chain, or oh, I thought I had Ethereum, but it turns out it was wrapped Ethereum on somewhere else. So all these sorts of things have to be ironed out a
Even
little bit. But
Sorry to interrupt. Even if you're using a wallet today, maybe you're using some sort of non-custodial wallet, but it's still an application on your phone or something. Now there's so many variations. Like you could be trying to receive US, Tether, for example, and it
yeah,
could be on any number of these different it could be on
it
Polygon, it could be on Ethereum, it could be on whatever.
be on Tron.
Right, yeah. Actually, Tron is like carved out a little niche in the stablecoin world, actually. A lot,
Yeah,
especially in Asia at least, but
it really has. I got an invoice in Tron USDT. I was like, what? Really?
yeah,
Okay.
the Chinese especially love that. Yeah, they really do. Yeah.
Yeah.
I didn't mean to
And
interrupt you. Sorry, continue.
no, so that's a little bit of work that we're doing there, but also uh yeah, it's um we're calling it like blockchain entanglement, like almost like quantum entanglement, because you sort of have two atoms that switch at the same time, polarities.
That's cool.
But yeah, so there's some irony going into that, but yeah, I'm really excited about the future of this whole FTX debacle has brought back the need. There's been so many people that have entered the market since Mt. Gox that don't understand that pain. They haven't touched that flame, and now they have, and they're like, "Ow, that really hurts." Um, you can throw so many regulators at the crypto industry, and you'll still get bad actors that hide stuff like Sam did. I mean, he hid stuff. What he was doing was already illegal.
Right, right.
It's not like they can just make it more illegal. No, it's the fact that these we need to build better systems, and this is where DeFi comes in. DeFi also has its problems. It's not a panacea. They can write smart contracts that will have holes that they can then siphon stuff from. There's all sorts of things that we need to look out for. And this is where like auditors come in, where we start looking at auditing firms auditing for not only vulnerabilities in the code, but also vulnerabilities from the people writing this. Like, hey, did you know these guys actually have an upgrade function in this that could mean that XYZ, right? So we want this is all a big learning curve for everybody, but we need to be heading in the right direction, and the right direction is decentralization in terms of the DeFi space. Start not stop using exchanges, centralized exchanges. Even though we run one, we run Vaultoro, we've run it for years, but the goal is, and Eric Boys is
He's such a
he's on the
legend.
same page. What's that?
He's such a legend.
He's such a legend, such a champion, such a nice guy. I've known him for years, and
Oh,
he's always stayed the same. He's always been true to his philosophy, and yeah, so he's done the same thing, right? He's changed Shapeshift from a centralized exchange, and then he got bent over by the state and said he has to take KYC, and he thought, no, that's against my my foundational philosophy. So I'm going to start looking at actually how to fix things in the DeFi space, and shifted Shapeshift over to be a DeFi protocol, which is just sensational, and I'm just so happy about that. But yeah, that's where we want to go is non-custodial stuff. You know, when people borrow money from themselves using the standard.io smart contracts, they first of all, they don't need to use the standard.io. Other people can write interfaces. We're just writing the smart contracts and having a reference client, so to speak, that people can look at. But B, they lock up funds and they still hold their private key. That no one can touch it unless it gets liquidated, but that's already in the code. You know that that's a function that will happen if the price drops. But apart from that, you hold the keys. You're not giving it to Celsius to speculate with. You're not giving it to who are those other clowns? BlockFi.
Or any BlockFi. Well, 3AC was a fund, but yeah, you're talking about custodians or
Custodians that allowed you to borrow money. Like what? Like, you know, we have the technology to allow you to borrow from yourself. Why do you have to trust third parties that are going to speculate with your funds?
Yeah, people got kind of enamored with the institutions coming in this time. It was easy to do, on it, to be honest. I think we waited so long for the institutions to come in, and I think even the people that have been around for years, you saw a lot of people that have even been around for years reportedly getting burnt. So I think everybody learned a lesson, even, all of us really is, we got to get back to the core tenets of this industry, or this, whatever you want to call it. So yeah, it's definitely very interesting. We talked about Eric Voorhees. I actually commented on his video that he posted that he was going to do the conversation with Sam about regulations. I don't know if you got to watch that or not, but I put on there about him being champion of liberty versus Biden's largest donor. I think he was his second largest donor. I think George Soros might have been number one. But anyways, it's kind of funny looking back at that quote now, and already what's happened since then. Eric basically just destroyed him in that interview. I think that interview had a lot to do with like what ended up coming to light with Sam. It seemed like, he kind of just fell apart right after that. I think a lot of people that video made the rounds on a couple clips of that interview, or that debate made the rounds on Twitter. And it's sad that so many people got caught up in that contagion, but
it's horrible.
Yeah, but like we're sitting here talking about decentralization, and the free market has a way of cleansing bad actors, like you said. What he was doing was already illegal, so you can't make it any more illegal than being illegal to begin with. So
and the wrong blame. I want to really point fingers here at Sequoia. Sequoia play a very, very, very important role, especially if they're leading rounds, because they do their if Sequoia's invested in your startup, everyone's investing without looking even at the data room. They're just throwing money at you, because hey, Sequoia invested, so they must have done the due diligence. But for Sequoia to be impressed by some clown pitching while playing League of Legends and finding that so fantastic that they're just going to go with it, they really let down a lot. And I don't see enough people pointing the finger at Sequoia saying, hang on a minute, because of you, this other fund invested. Because this other fund invested, these smaller people invested. Because these smaller people invested and saw that Sequoia, it all leads to Sequoia. And, they don't look anymore because of that. And then Fortune magazine goes, wow, Sequoia, okay, I'm going to stick Sam on the cover, boom. And then, Fortune's on the cover. So, hey, it's this sort of snowball that starts with someone like Sequoia not doing proper due diligence. And really, it's not, come on, Sequoia, you guys have the accountants to look through the books and see what's cooked and what's not. For them not to have done that properly has really let down the entire industry, and they really need to repent.
Yeah, they've got a lot of people have. There's been a lot of pain from this FTX fallout. I have a feeling we haven't seen the end of this yet. It's gonna. Yeah, I thought when we peaked at 69,044 Bitcoin that max pain might be 17K, May or 17, 13, 13 would be max pain. I thought 17 was possible. And now we're sitting here and it's like, man, maybe we could see 7,500, 10K. I obviously never financial advice, just talking about it on here, but it's interesting to think about like, do we still have another 50% or more to go on some of these assets? It's going to cause a lot of hurt. And there was a lot of people like getting back to people that have been around and should know better. There were a lot of people that were like, I put out, I don't want to call a call or whatever. I said in April, I think it was of 2019, that I was going to be out at $65,000 Bitcoin. And I held true to that. I had a little bit still on the table in a few things, but I was almost completely out of the market, 80% or more by
Wow.
that
Good
top.
call.
Thank you. It was like 952 days in advance. I went back and looked at the YouTube video that I published about it, but the first one, and then I went on a bunch of podcasts. But the point is, I was trying to make is that it seemed like there were a lot of like people that would have been in the industry for a long time that kind of just like, I don't know if they got overzealous or they were just wanting to pump their own bags or what, but it just seemed like they kind of like I don't know. They kind of let people down, in my opinion. People, and then even like after the double top was in, and it was very clear that it was like in my opinion, by the you know January, February, it was getting pretty obvious. They were still saying new all time high in 2022, and I'm just thinking like I don't know. But do you have any thoughts on those on people like that or?
Yeah, oh, look, I, in the last 2 years, whether you're full on like into the whole mask up COVID thing and inject every booster under the sun into your arm, or you're on the other side where you're like, screw the mask, screw the booster, I'm not taking any of it. Whatever camp you're in, you have to admit that humanity went through a psychosis of fear where all of a sudden everyone believed one thing. Society, you couldn't talk against it. It was like the burning of the witches. If it's not everyone can't be wrong. Everyone can't be wrong. How can everyone be wrong? And so the same thing happens in these bull markets. If there's this collective
That's interesting.
sort of formation where everyone's like, it's all just going to keep on going, and everyone, and so, wow,
Super
Sam just,
cycle.
and it doesn't. So everyone's just repeating how brilliant it is, and you get the same on the bear market. Oh, it's over. Crypto's the worst thing ever. It's the bottom's not in yet. It's gonna go further. Everyone can't be wrong, but they can, because they usually are.
That's a good point. Yeah, what is that? There's another quote. If you ever find yourself in the majority, you need to reassess. Something like that. If you're in the majority, you need to reassess.
Yeah.
It's very true. It's very true.
Yeah.
I just have a couple more questions. I could talk to you forever, I feel like, about this stuff.
Thanks, man. You too.
Yeah, you're an interesting guy, and I like hearing about what you think about things and what your background's interesting too. We talked about I know one thing I wanted to ask you that since we've got on here, we talked about auditing a little bit. Have you had Surtech or who are you guys having your code audited, obviously, so
we went with Zokyo. Zokyo has been it's run by Hartesh Soni. He's really one of the grandfathers of smart contract auditing. He basically was there when Ethereum first started doing that. One of the first to start auditing contracts. So we actually got him on as an advisor onto the project because I wanted the best in the industry, and then his company audited the contracts as well, the smart contracts. So yep, and you can check them out. We've listed them on CoinMarketCap now as well. And funnily enough, I've just today gone back into Bitcoin Talk forums and put up our project, sort of updated the thread there and started to add more stuff. So it's funny. I'm just not a forum person, I like you know.
That's
So I
one of
thought,
the things that Vlad asked me about on the Bitcoin takeover when I went on there. He's like, were you one of the people, one of the early people on the Bitcoin? And I told him I wasn't one of the early people on the Bitcoin talk forum. I think I made an account, but I never had like a presence there.
yeah.
Um, it's funny how like, just because you were in Bitcoin doesn't mean you're on the Bitcoin talk forum, but looking back, there's like these sort of things where a lot of people congregated there, and I don't know why I didn't really get on. Maybe I just, it's just things you find. Like I like to talk when you talk about the early days of Bitcoin. It's there wasn't like you would go maybe a day, 2, 3, 4 days without really finding anything really interesting about Bitcoin. Now you can't even look at all the Bitcoin news in one, that comes out in 1 hour in a day or something. Like it's
That's so
insane.
true.
It's
It's so
insane.
true.
Yeah.
Yeah.
But I wish I would
Yeah.
have been on there more in the beginning. I probably would have just met a lot of like, a lot more of the OGs at that time. I felt really alone back then. I didn't have anybody really to talk to about it.
Oh, same.
Yeah.
Same, especially being in Australia, because no one knew what this thing was and had no interest in it, you know. But yeah, I think it's similar to AI. Like the movement in AI right now, I think we're in this hockey stick graph of movement in AI, and it used to be like every 6 months or something there'd be a new AI model that had been trained, and it'd come out in the news, be looking at it like, oh yeah, that's kind of interesting. And now it's like there's hundreds of models being pumped out every week, and you can't keep up anymore. It's sort of the same thing is happening in that side of technology.
Speaking of AI, I finally got a Roomba or whatever they're called, the robot sweeper or vacuum or
Oh
whatever.
yeah,
Yeah,
nice.
and I'm just like amazed by it. I can't believe how good of a job it does. I mean, it's like off topic, but it's just
Yeah.
interesting. It's like
Yeah.
we're
Yeah.
seeing like I have a robot literally cleaning my house now, so it's
Nice.
crazy what this century we're gonna see. We're just like getting started here, but just what we've
Yeah.
seen in the first 13 years of Bitcoin is insane, and then with smart contracts and stuff, it's gonna be
Oh,
amazing.
look, there's so much stuff that we've been talking about in the industry for years, you know, like I remember Mike Hearn even giving a talk back in the day about people like crowdfunding a car, right? So and then letting it be autonomous. So no one owns it. You just sort of crowdfund this thing and then let go. So now it's its own unit, and it drives around, playing taxi, and then it gets so busy after a while that it's like I'm gonna order myself a daughter uh, off of, I don't know, Amazon or whatever, and then the daughter comes in and starts building out this fleet, and then because humans always try to hack any sort of robot, so the robot would like first any upgrades that happen, it would first test out on the daughter vehicle. So if it went in for a service, it would first test out any software upgrades on the daughter, and then if the daughter stays as profitable, then it would self upgrade as well. And maybe after a while, if the fleet gets too big, it would like sell off things and people can then buy them. Like it's just all these ideas that have been floating around for a while, that think we're getting to the stage now where some of them can start to flourish. Some of the ideas of like, oh, we're on the freeway in my autonomous car. I want to go a bit faster, so I'm going to send a few satoshis for him to move out the way, and then I'll just pass.
Oh, that's an
Things like
interesting
that.
thought of, yeah. I actually have thought about the car idea a little bit, not specifically what you just said, but it's interesting to think about how we could use cryptography and stuff to make them unhackable. Because you see that more and more, and especially like um, with Teslas and the software and those now and stuff. I know they're like far beyond the majority of cars. I've been in a few Teslas and just not a I don't know. I like the some of the aspects of the Tesla and others I don't, but I think that what they're doing with the software and stuff is like super impressive. So we are
Yeah.
going to see some sort of thing like people mining Bitcoin while they drive around and things like that. I don't know if that's been done yet. Have you seen
Oh
anything?
yeah, it's been done.
Yeah.
Yeah, yeah. They there was the original Teslas you could buy with unlimited charging, free charging on the superchargers. So and that's attached to the car. So when you sell the car, that bonus comes with it.
So that's
And
still
so
good.
people,
You can still charge for free.
yeah, so
Yeah,
people are buying these old Teslas that still had this deal with it,
I
and
didn't
then
know.
they're filling the frunk, which is the room at the trunk because there's no motor with ASICs, and they basically just charge up this thing at the supercharger, run the ASICs for a bit, and then I don't know how profitable it is, but
But just as like, a geek thing or something is pretty cool. Like that you can do it. That it's feasible to do.
yeah, yeah,
Yeah.
yeah.
So all right, just a couple more questions. What are the how big is your team at the standard?
We're around 11 people, 12 people,
I
something
was
like that.
just
Yeah.
just curious what it was like.
Yeah, so we got we have four co-founders, and then we have we've got we've got a video editor, we've got three devs, we have someone working on just keeping things organized in the marketing side in terms of writing blog posts, and that's mainly to do with BizDev because BizDev do all this stuff, and then we like making partnerships. So we've made some really good, strong partnerships with yield farming things and NFT marketplaces and stuff like that. But one of the most interesting ones I found was the ability to do micro lending to coffee farmers and stuff. So having sort of real world effects, because a lot of these sort of micro lending platforms, they really gouge farmers, and the farmers even pay it and have a really low default rate. But through this one service that we've just partnered with, it allows them to really start to yield farm. Sorry, you use S-Euro, and then you fund a farmer, and then they pay that back with a really strong yield, like 50% or something like that yield, and you're not just doing DeFi yield on yield things. You're actually helping a
Right.
farmer out by allowing them to buy beans and stuff, seeds or whatever they need the cash for up front. And I really love that idea because this really what at the end of the day what we need to do is have real world reasons to lend and stuff like that. And so yeah, that's something. But so we write a lot of blog posts about the partnerships that we're making and stuff. And we haven't even launched yet, and we've made a bunch of partnerships because they know the team from Vaultoro. We've been around for a long time, and we're fully doxed, and we're serious players. We don't have a dog on the on the coin. We are trying to build like serious DeFi solutions.
Yeah, I think that's why, a lot of I'm sure I think just from talking to you, I can tell you're similar philosophy, philosophical opinion or ideas as me. These are some of your partners, right?
Yeah, Ethicub is the one I just talked about.
Okay. Yeah, that's why a lot of the old school Bitcoiners got in crypto or Bitcoin in the beginning to begin with was the ability to really impact the world and like see the economic growth that you're talking about. I think so. That's super cool that you are still focused on that because a lot of people have lost their way in my opinion, and not to say everyone has because that's definitely not true, but a lot of people definitely the first principles of Bitcoin, in my opinion, were like free markets and trying
Yeah,
to
free
have,
markets, bank the unbanked,
yeah,
unbank the banked, all this stuff, and it's sort of just headed to Lambos, and
right,
it's nasty. But actually, what's sad about the FTX thing is that Sam pretended to be this high principled guy, and in the back end he was just an absolute fraudster. And it sucks because there are really high principled people in this industry, and we shouldn't feel jaded about people doing good things. We shouldn't look badly at people trying to do good things and think that they're, brush them with a scammer brush. That's one thing that's really disappointing about the whole FTX calamity, but is what it is what it is.
Yeah, as long as there's enough of the old school mentality and the good people out there, we'll persevere. I believe that truly, I do. I'm trying. I don't not that pat ourselves on the back here, but at least we have like in first principles. We try to do our best. None of us are perfect. Yeah. So last question for you. I hope I can talk to you again. We have to meet up
anytime, man. Yeah.
Yeah. Well, let's talk maybe Q2 or Q3 after you guys have a little bit of time next year and see how everything's going. I'd like to talk. Yep. I ask, this is like one of my default questions I like to ask at the end. I think I've asked it probably on 80-90% of the episodes. So I think I already know, but what does we've talked about it a lot, but what does Bitcoin mean to you overall?
Bitcoin means self-sovereignty, and competition maximalism. Actually, that's what it means. It's competition maximalism. It means that we can always have an exit door if they're going to screw with the money supply. It means that we can have true bearer-based assets that can't be copied and can't be taken away from us easily. And that's what it really means. Yeah.
That's a good answer. That's a good way to close this one out. Joshua Shigala, I appreciate you coming on the show today, sir. Everybody make sure you check out his website, thestandard.io. And check out Vaulturo while you're there too. But definitely check out this new stable coin, because we didn't talk about Tether and USDC much in this podcast. We're focusing on the future here, but there's definitely a lack of transparency in the old world, and those are two sort of like old world ideas. So maybe next time,
they're just as bad as FTX and all of them. Right. Like, I'm not saying that they are, but they have the potential. And basically, it's important to build things that don't have that potential. We don't have, you build the code rule, the code regulates it, right? Ultimate regulation through code.
Yep, I agree with that, sir. I'll catch up with you soon. And you want to drop any other links or anything?
No, that's it. I guess my Twitter is J Shigala. You can I guess it'll be in the show notes or something.
Yeah, I'll put them in the description of YouTube and all that stuff. Yeah. Hang on 1 second, I'll say a formal goodbye.
Yep.